Good morning to all of you. Yesterday we covered the 805 Google calls and puts, both. 805 call option versus the 805 put option. This was posted yesterday. Now, here's what we're going to do. We're going to tell you that Google right now is down 64 cents. On the opening bell with this 805 call action, we went from 457 to the high of 8.9 and the 805 call monthly strike price. We do have limit orders out there below the marketplace to add to our position should that happen. Right here we can see it selling down, and that is the actual value of the 805 call, and what you see here is 3.5 by 3.8, closed at 4.3, high was 5.10. That's an 805 put. That's just the opposite side of the market, that the bids, they stole this premium here on this monthly 805 put. Our limit order here is about $1.25. The call side of the market worked. It went up to 8.9 on the 805 call. It hit the low and it went straight up in Google stock. There it is, 811.36. Not only that, we will look at our platform that we own and show you what the market maker level is on Google. And we're going to go to the Google chart, and we're going to wait for it to come up. This is a 3-minute chart in our platform, and we can clearly see that the market just took a real big dump, 69 on the Dow, and that S&P there is 7.26. That means that this is the pullback side on the 3-minute market maker app, and we can clearly see outside of the box what happened here. We had that 3-minute breakdown, and this is that breakdown here right now. We thought we would also cover another chart that would be ideal for you, bigger players in the option ring. And here's what I'm going to do. Here's a 60-minute chart in Google, and I'm going to hit there, and here are the diamonds, which are high frequency trading technology super bots that we designed at the price. That's another topic later. So let's go ahead and do some deltas. Let's go to 10 deltas. Bingo. How about that? That was very quick. Here's the bigger box. Google on a 60-minute had a breakout here, and it failed for now. Basically, we're at a 30 IR. We're not above 65, so the lower this goes, the weaker the 60-minute bar is. Each line is 0.89 cents, 89 cents. This is how accurate it is, the teeny value. 8.62 quarter values equals 7.33. And intraday range is 7.33. That's how accurate we are. So I'm going to go ahead, and we're at 12:21 p.m. Pacific Standard Time. Eastern Time would be 21 minutes after your hour. Think about that. That's an old expression. Here's where they slid that, and here's where that 60-minute breakout stopped, right up here at that teeny line, and we broke below the half bars with this right here. So now we are half bars, 806.63, and the values are down here in the info panel, and we'll see what it's doing. We will be back very shortly. Market hours on a 60-minute chart. This is Google on a 3-minute chart in our turbo option trading platform, and we can clearly see that we had a pop We sold down, we popped, and now this is the low down here based on this breakout with these diamonds over here on this other side of that market. And so that's what it looks like. A 30 IR, that's weak. This has got to go above 45 and above 55, and we'll stop the selling at. And it's 22 cents on a 3-minute value called RTs. And we have 33.014 times 22 pennies equals 7.33. Well, that just so happens to be the range, 7.33 up here in the public model and whatnot. So I'm going to say that we will stay with the put options is when we are going down in value for beginners and advanced people or professionals. Listen, it's all about the algorithm and how we punch the big drop down on Google on the 3-minute chart. We're going to go back, and here is Google right now, live in these markets at 806.20. There is a 480 bid now and a 510 ask on the 805 call option. And 7 more minutes. We will take a break, and we'll see what happens. The 805 puts, they're right here. And the low was 2.7, and they're at 3.4 by 3.8. Ideally, we would love to get orders below this side of the market, but they have to go our way. And that means that the call, 805 calls here, they did go to 890. Yes, they did. And there's 695 call options traded today. And on the put side, that volume was only 220 versus the call side of 63.7, both at the same strike price. How did they steal money out of the put side, and how did they steal money out of the call? Both same strike prices. You get with us, and you deserve a new opportunity. Believe me. We're going to conclude the follow-up on the Google and whatnot.